Hey members, welcome to Trading Capital's daily analysis video. It is currently February 22nd, and jumping into the S&P, starting off this video on the daily chart of the S&P, we warned you that the S&P was likely going to have to see some more downside to this trend line, and look what we bounced today. It also coincides and converges with this upsloping trend line connecting with these major pivots, and you have received a minor bounce on the S&P. The volume today was pretty significant. You did trade 83 million, so it's slightly above average trend, which does mean that the overall volume and sell side pressure is starting to potentially confirm the new trend in the cycle. If this sell off was on lighter volume than this, I would be a little more skeptical, but considering the volume is picking up, it does favor continued more downside. Now, there's a couple big things that happened after the bell. Nvidia has popped, which has lifted the spiders by over $1 in the after hour. Basically, if we pull up the Nvidia chart, it is trading substantially higher on the session. So for us to exit our short trade not too long ago and covered a beautiful gain, and it's basically right at that level again, trading upwards of 225 in the after hours, I can simply just look at this rally on Nvidia. But nonetheless, there's going to be ample shorting opportunities for us. I'm eyeing up anything above this 229.98. I'm actually hoping Nvidia officially fills this technical gap around the 231 area. But anything above that zone, get ready to short, because Nvidia still has put in the sell signal. This little light volume pump is very, very notorious in the after hours, but often you really see if the rally has any meaningful legs once the heavy volume opens up in tomorrow's trading session. So overall, watch for Nvidia for a short. This should gap up the markets because it is a market mover and it's hitting strength, which makes kind of sense. Markets hitting near-term support, they should get a bounce. Nvidia is reporting good earnings, they should get a bounce, providing the forward guidance doesn't go horrifically and that the questions don't open up any loopholes or flaws in their business model. Nonetheless, though, the Qs will likely benefit from this area. If we lose this support, then it's extremely bearish. Basically, the big resistance level is this previous pivot high, and we can chop in and around a range for quite a while until we make a more directional move. But now that Nvidia, the final big mega cap, is out of the way, if we have one last little rally, it's going to be pivotal for us to increase our short exposure, because I do think that we're going to have a lot of opportunities. You did see a variety of other names also report after the bell, like Teladoc, Etsy, eBay, and you had mixed results, Unity Software. Looking at yields are interesting because they took a little bit of a breather here, but really the US 2-year yield is still technically in bullish consolidation mode. Take a look at this. It had a dip and then it rallied up and recaptured half. This is what we want to see for yields. It's actually a very, very positive day considering it's just an inside day on the US yield, which proves that yields could still potentially move higher. Even if we take a look at the 30-year yield, take it a little bit longer on the spectrum, also an inside day. This is actually extremely bullish. You're now consolidating, looks to be basing above key support areas to potentially move through the next resistance level. So if yields move up, obviously that's going to imply what on the dollar? Likely a move up. It's clear why the market sold off. The dollar had strength today, finishing up 0.35%, and the dollar is still very, very bullish. And what this could be signaling, potentially with us breaking out of this larger bull flag, this mini bull flag, what this could be signaling is maybe insights into tomorrow's data. Tomorrow at 8:30, we have key economic data. We have US job loss claims at 8:30, as well as GDP. Let me be clear, GDP is going to be massive. It is going to be massive for the Dixie. If GDP comes in hotter than expected, which is our likely scenario and our best analysis, is that GDP is likely going to come in hot, which shows that the economy is still raging and booming. Why we have basically put our analysis on the line here and say that we think GDP is going to come in hot, therefore spiking the dollar, is simply if we look at the last important data sets that we got, specifically correlating around the labor market remaining excellently strong. And then when you look at the booming in retail sales, and then finally the two data points that hit the nail on the head is the CPI exploding higher and the PPI increasing. Those four metrics alone definitely put in the favors of a GDP coming in hotter, which could spike the dollar. Nonetheless, even if GDP doesn't, could be another catalyst. Maybe it's the payrolls, maybe it's something that the Fed says. Maybe it's some sort of geopolitical event, but this is bullish pattern and it looks very, very strong and poised to move higher. And we all know what happens to the markets if the dollar ends up moving higher. Taking a look at natural gas, what wild price action today. Oh my goodness. It ended up being a good ad level for now, but natural gas hit that massive, massive trend line of support, and you did get a bounce. You actually pierced that level, closed below it significantly, but rallied back today. At one point, natural gas was all the way up to 11%, a high on the day, and then basically the FOMC minutes came out, huge momentum swing. Dollar ended up pushing higher, and it just pushed natural gas lower. Now, the good thing about natural gas is it did hold this downsloping trend line. And notice how you got a bottoming tail right off of that trend line. So this is the area we want to hold as support now in natural gas and build a base to move higher. It's going to be interesting to see if we can get a daily close above this pivot. If you do, then that likely means we could see a move all the way back up to about 290 before we head into the next major resistance. But if you get a close above this pivot tomorrow, natural gas could have definitely put in a near-term cycle low. One thing I'm watching, we do have it right now, but there's 2 days left. Do we get a weekly reversal signal on the natural gas chart? Lots to consider. So far, our UNG is still out of the money, but potentially that max downside calculation that we had picked out for quite a while in our chart hit, and we have bounced. Basically, we were able to add at the lows. So it's good to see that our last add on, or we still have some maneuverability, but we have a 5-6 position on natural gas. It's good to see that that last level there that we added is starting to potentially bode well and put in maybe a basing formation. Let's take a look at gold. Gold saw exceptional weakness today, basically hitting our target once again. It's still holding this reversal candle. I find it very difficult that gold is going to actually hold on to this, especially when you simply look at the dollar. I mean, this dollar bullish pattern, if it breaks to the upside, we're going to certainly see gold fall lower, and I still have a downside target. Couple trades we're watching on the radar. We're getting very, very close. Newmont Mining is coming into a day trade level and a swing trade level. So basically, be ready. I'm going to be executing a buy order at some point in time in the near future. But this one's certainly coming up into the radar. I like it at a Pierce of 44 or lower. For a day trade, I'm eyeing up this 43.79 pivot or 43.75 pivot, and then even potentially this 42.69. But again, I'm a little bit, even though it's into good technical support, one of the simple reasons I'm staying away from it right now, this point in time, is simply because I do think the dollar is going to move higher. Now, typically, metals and miners can diverge in a cycle, and typically you see the miners lead the cycle lower and higher. So what I could be expecting and waiting for is there's this downsloping trend line on Newmont. So if gold sells off because the dollar breaks, we could see an additional move down on Newmont, maybe down about 5% into this downsloping trend line. And that could coincide, if you look at the Dixie potentially hitting this upsloping channel. So notice how the Dixie, you have this upsloping resistance, and then on Newmont, you have this downsloping. Very similar, very inverse relationship. So look for that level. Those are kind of what I'm watching, but you are getting into some decent support here. Silver's actually looking interesting too. I still have it priced in that it needs to go a little bit lower before I'm interested in a buy. I'm also looking at Pan American Silver. Pan American Silver, basically anything below this 1491, I think is a decent area to start accumulating a position. Hopefully it comes down there in a sharper move lower. So those are just a few trades that we're watching and eyeing up in the near term. Overall, it's been a very high profitable trading session as of late. Yet again, we're continuing to bank winners. A couple new trades that we picked up. Let's just go through some of the scalps. We covered our XOM short today. That was a beautiful cover, so it did bounce off that level. I still think XOM technically goes lower, but how the market cycles work, now that a lot of people have seen this pattern break down and XOM's breaking down, often it will retrace up to scare people out. But I'm looking for a move up in XOM to get into the short, or potentially a bearish pattern. A bearish consolidation would allow me to re-enter the short. I do think based off of the oil price, oil getting clobbered today down basically 3%. I mean, this turned into a bullish pattern that has failed. One thing about the bullish patterns failing is they often produce a much larger move to the opposite direction is where the pattern failed. So needless to say, I still think oil heads lower, my next target is, or my next major level target is 66. You likely still get a mini bounce off of this trend line once you tag it. Maybe you pierce it and hit this double bottom zone over here at 70 bucks. But needless to say, you did bounce off this trend line once over here. You kind of kissed it here, but the bounces are getting smaller and smaller, which is telling me that buyers are being exhausted and that there's certainly a selling side pressure, definitely taking grip of oil. If oil keeps coming down, that's actually positive for a few different sectors and the stock market as a whole. But then you have to really factor in and take into perspective, why is oil coming down? Is it simply because the SPR is being drained at rapid paces? Or is it actually a combination of factors, the SPR and maybe the economy starting to dwindle and wane? Manufacturing PMIs will continue to be forward-looking indicators that we'll pay attention to. But right now, oil is definitely signaling weakness and continued downside nonetheless. Let me just see if there's anything we can touch base on. GE is a new trade setup. So looking at General Electric, I just executed a short trade on GE today. Basically, GE has been trying to put in this bullish consolidation, but really haven't been convincingly making new highs. And today it had a nice last gasp at a move up. Maybe you get a move up tomorrow, but we executed a short trade at 83.68, and it is down in the after hours, even though the S&P is up. So that's a little bit of a good divergence and observation. Basically on GE, what I'm observing is you have this upsloping consolidation. You're extended on the chart. You're into good resistance points. We're talking multi-year pivots. You also have this beautiful downsloping trend line connecting a major pivot in 2018, a major pivot in 2021. You've tagged that level now. You've basically bubbled up on it for several weeks now, and it's looking very difficult to get through. There is the potential that GE can actually come up to this $90 area. So we're just accumulating a position now. But at this point in time, it does look like it's starting to potentially lose its momentum, and a little bit of divergences are occurring. Intraday chart, you can see that it did have a hard sell. So we're now in the money on that trade. But basically, I'm looking for about 10% move down. Next support that I see GE falling to is likely this pivot around 75, maybe a little bit lower to about 73 area, where you have this upsloping trend line. That's about it for today. We also still shorting Palo Alto. PANW had an impressive move. It likely is going to see upside tomorrow as long as the markets hold. This stock is going parabolic. I mean, it's extended. Yes, it's on earnings, a good earnings play, but definitely intraday distribution occurring. I mean, if we simply look at some of the reversal candles that the market put in, if I flip into the regular trading session, there's definitely distribution occurring at these highs here. Even if we flip on the 20-minute chart, look at this nasty reversal. It did happen on volume. So lots of distribution occurring at these levels intraday. Stock is extended. I still think at the minimum we come back down to this gap fill around 177 and then even lower. But our average now on Palo Alto is sitting at around, let me just pull up my other chart here, because I have it on this chart. Slightly out of the money. 185.51 is our average. So we're slightly out of the money on that one, but that's okay. I do expect that one to come in, and we are just accumulating a position at this point in time. Needless to say, with Nvidia having a powerful earnings report after the bell, what we can expect from Nvidia is for the markets to gap up tomorrow. Obviously, the interesting thing is before the gap up even happens, since the markets are up in the after hours, what we get at 8:30 is GDP and payrolls. I discussed it earlier, what my expectations were. Payrolls, I'm not really going to make a guess, but being the fact that the payrolls numbers have been coming in stronger, inflation has been reaccelerating as of recently through the CPI and PPI. My guess is that the labor still remains very strong. Even though we've had meaningful layoffs across sectors, it still doesn't really compare to the hiring that transpired in 2020 and 2021 with the QE and zero interest rates. But if those numbers come in line or better than or worse than expectations, and yields fall and the dollars fall, then that's going to bode well for stocks. On the back of Nvidia, right now you have a tailwind in the market since Nvidia is up, but we have to get through those two economic data points at 8:30 to really see what the S&P is made of. I mean, intraday on the hourly chart, you can see you're still trading inside of a big reversal hourly candle that made you close on a new closing low. and even with the Nvidia pop, you're still trading inside of that. So let me be clear, these markets are still remaining bearish, and that data can certainly push it over the edge if we get another hot GDP number and a hot jobs number. On that note, I'm going to bid you farewell. Congrats on the profits. Our accounts hit yet again a new high. It's great going into these earnings with lots of liquidity, lots of extra cash, lots of our cash balance has been raised significantly. And we're just going to continue to try to trade the trends and anticipate where the yield markets are likely going to go, where the dollar market's likely going to go based off of pattern, because I do believe that there's ample opportunity to understanding the currency, the yield market, and the stock market, and the real estate market, and incorporating a macroeconomic spin on it to give us highly, highly profitable trade setups. And it's all about probabilities. We don't have to be right all the time, but we strive to be right as much as we can. On that note, take care, everybody, and congrats on the profits today, and we'll see you on the charts tomorrow.